As a trader, it's very important you understand everything about market structure. To understand the market bias, you have to be able to read the market structure, because structure tells you the history of a price, whether it's going up, down, or just ranging. And when you fail to understand the market direction, you find yourself fighting against the trend. And this action will not only just cost you your win rate, it will all cost you money, stress, and mental stability, and you won't be able to trade with clarity. But that will no longer be the case from today if you watch this video more longer, because here I'll be giving you a full knowledge of market structure and how to read market bias. Market structure, which refers to the trending direction of a market, has three phases: the uptrend, the consolidation, and the downtrend. An uptrend refers to when the market is on an upward version like this one, and in an uptrend we only want to buy. Downtrend, at the other hand, is the opposite of an uptrend, and in a downtrend we only want to buy. Now, on consolidation phase is when the market is just consolidating and not doing anything in terms of telling us whether to buy or sell. No clear direction. To identify the market direction, to know if it's an up or downtrend, we use the highs and the lows. In an uptrend, we only want to see the market print higher highs and higher lows like this one. With this, we know that we only want to buy in this market. Downtrend is just the opposite. We want to see the market print lower lows and lower highs. Every low must be lower than the previous low, and every high must be lower than the previous high. In a ranging market, we only see the market form equal highs and equal lows like this. You can call it support and resistance. Every leg of price action move always feature two primary phases of movements. We have the impulse move and the correction move. An impulse move are those movements that leads us into new highs like this. These large movements are the reason why we can call this an uptrend, because we keep breaking highs. Correction move are the small pullbacks against the trend after an impulse move. Because traditionally, price doesn't move in a straight line like this. It's always going to pull back and move like this. The reason for this little movement, these little pullbacks, are mostly when some buyers start taking profit. It makes the market, the main movement, lose some momentum and give some sellers opportunities to sell in this market. That's the reason why we get all these little pullbacks, and often it does pull back to an area or a zone where new buyers are interested in buying again, and this will lead into another new highs being formed. You understand? It will result into another pro movement because the buyers will take control again. Now, when trading on a real chart, what you should be paying attention are on this impulse movements. So to catch the next move when this pullback happen, your job will be to be able to identify where these correction moves might end, using your own style of trading to get into the trade from the bottom of the correction, enjoying the next big move. I do see a lot of YouTubers telling people to use trend lines to identify trend, but I am totally against that idea, and I would advise you to use a raw pure price action movement because it is the best and more effective. I want you to allow me to prove to you the reason why I'm against their style and why raw pure price action is more effective. Using a real chart for this example, as you can see here, this is a trend line, a downward trend line, and this is supposed to indicate a downward move, because as you can see, we connect one price to another with this tab, and this is supposed to indicate a downward move. Now listen, this is the concept of trading a trend line. The concept is anytime market gets into this trend line, anytime market stops this trend line like this, and like this, it should be selling. And anytime it breaks it out like this, then the trend has changed. So if market is to give us a structure shift like this, a break and a retest, trendline traders will immediately assume that this market has changed in trend, and they will start looking for opportunities to buy, because to them they believe that this indicates a market shift, a trend change, which is an easy mistake to make when you are when you are using trend line. Before now, I said something about lower lows and lower highs, that we identify trends with higher highs, higher low, lower low, and lower high. Now, using that lower low and lower high perspective, I want you to look at this market structure right now. Has this trend structure changed like the trend line suggests that it has? The answer is no, and here's why. As you can see, market had a lower high here. We came here, we formed a lower low.
we had a lower high and a new lower low here. After that, we made a lower high again here and lower low. We came here again, we formed a lower low, which led to this break of structure right here, which is a lower low. Now pay attention. If we take a look at where the price is at right now, you see that it is still below the previous lower high. So that means we haven't even changed in trend direction right now. The only thing that have changed is this imaginary trend line that your YouTubers always tell you to draw out, and anytime it breaks, you should be buying. But looking at the reality here, you see that this market is still below this previous lower high, and market is still breaking lower lows. Market is still creating lower lows, which means this downtrend is still intact. Now if you make a mistake of trying to buy from here because of this trend line has changed, you definitely lose your money, because look at what I just explained. As you can see clearly, the trend is still intact and you're just trading against the trend. I won't blame you though, you are just looking at your imaginary trend line. The only time that this downtrend will be invalidated is when we get a break of structure like this, pull back, and the market continues. Only then has this market changed in direction, because we start seeing new higher lows and higher highs being formed in the market. Until that move that I just said right now happens, this trend line is just your imaginary thoughts of what you think, what you want market to do instead of what market is doing. If you understand, I'm just gonna play this trade right now and show you what would have happened to you if you were looking at this trend line. Let me just fast forward it a little bit. So as you can see right here, this market continues making lower lows here. And listen, from a trend line perspective, you would have been wanting to buy this market because it broke this trend line. But from market structure perspective, you would have been planning to sell from this pullback here, this lower high here. And had it been you got into a trade right here, you would have made at least 1 to 5% of the trade, while the trend line trader is losing.
And where people get it wrong when it comes to structural reading is trying to make sense and looking at every little details in market pattern and trying to make sense out of sense that doesn't make sense. And by doing this, they get confused. In this example, you can see we are on a clear downtrend. Now, this is what amateur will do when they get to the chart, is trying to mark out every detail in the market like this. Their reading of structure will be like this. They will be marking candle from edge to edge like this. You see, every little detail, they will mark it out like this. Some people, their own might look better, but some just exactly the way I'm marking it out. Do you understand? If you're reading structure like this, then that's the reason why you don't understand this power of structure. And to ease the long explanation, I want you to see structure as a wave. Instead of marking out every little details, I want you to see the structure as a wave. Now, when reading market structure, you have to zoom out to be able to see what the market is doing. Now, let me read this market structure the way it should. Now, we came here, we had a lower low, a break of structure here. We came to this other side, we formed a lower low again here. So now listen, the pattern will be like this. We had a high here, a high low, came here, formed a lower low, came here, formed a high low, had a lower low here, had a high, a lower low, a high low, and a lower low. So this is how to view and how to zoom out a structure. Before you ask me a question, let me explain to you how I came into conclusion with this structure that I just marked out. Although we have all these little movements here, I know you must be wondering, that doesn't really change the trend, because now remember I told you that how to read a downtrend is by the lower highs and lower low. We came here, market came here from the lower high, we came here from the lower low, we came here, we had a lower high, came here, we formed a lower low, we came here, formed a lower high again. Now, every movement you saw here, all these movements you see here, none of them broke this lower low here, and none of them went above this lower high. And after a while, market just broke out, validating this high here. So what this should make you understand is that all these little waves you see here are not that relevant, because it all happened within our lower highs and lower low. It didn't break out any structure to any other side. You understand? Though this little movement could be traded, you know, that's what I call counter trading, but just get the point here, because it does this, all these things you see here, all these ones, they didn't break our lows and they didn't take our highs. It's still happening within this place. And remember, we read downtrend like this with high low and low low. So when you start viewing structure this way, instead of marking out all this little detail, all these confusing little details, structure start making more sense to you, and you start getting more clarity when you are trading with structure.
Now, if you've been paying attention to this video, there was a time I mentioned something about counter trading, and I said I'm going to teach you guys counter trading. Now, pay attention, because this is the time you need to pay attention to this structure class. There is a word in Forex market that says that Forex price movement is very, very fluctual, meaning what you see appear in the 4-hour time frame can appear in the 1 minute time frame. What you see appear in the daily time frame can also be the same thing in the 1 second time frame, in the 10 minutes time frame. Because of this, in every large movement we have in the Forex market, there is always going to be a little trend within the lower time frame, and this results in creating a swing structure and a substructure. For example, let's say this black line right here is a daily time frame movement. You understand? It's the big move. Now you see every big move in the daily time frame is always going to feature a 4-hour trend, a 4-hour little trend, and every down move in this daily time frame is always going to feature a 4-hour time frame trend, a 1-hour time frame trend, a 2 minutes time frame trend, and it keeps going down like that. The term substructure is what I call a counter trend. Substructure are just those little trends within a swing structure, and the swing structure is this big hour time frame trend.
Now let me show you a strategic way to take advantage of this substructure, that is the counter trading, and make you more money. And the substructure that we will be trading for this are this corrective move that happens after the implosive move. Remember, I told you that market moves in an implosive and a correction move, so the ones we'll be concentrating on are this correction movements here. It makes more simple when trading with this pro movement, that is trading with the higher time frame. I'm going with the higher time frame. Now these pullbacks here, all these smaller pullbacks here, always feature their own small trends, smaller trends, and good trading opportunity that we can trade and make ourselves more money if only you understand the concept of substructure, that is counter trading. And the way we're going to do this is, when you look at the higher time frame, as you can see, it's going quite very, very simple. But coming down to the pullback, the corrective move, when you go down on the lower time frame, you are going to definitely be seeing reversal happening in the lower time frame, that is reversal happening and structure shifting in the lower time frame. Before you will be able to understand this substructure concept, you have to first of all understand reversal concept and how reversal happen. So before we get back at this, let me first of all teach you reversal concepts. Identifying a reversal in the market, it's quite simple. What you should be looking for is a market that shifts from making higher highs, higher lows, to making lower highs and lower low like this. Because a pattern like this, a shift like this to the downside when it's a sell, tells us that this market is no longer bullish. You understand? Because we stop seeing higher highs being formed, rather we start seeing lower highs and lower low like this being formed. And this is a valid reversal shift from bullish to bearish. When a shift like this occurs, we should start looking for sells. Same thing goes to a bullish reversal. When we stop seeing market making lower lows, lower highs like this, and instead shift into making higher highs and higher lows like this, in a shift like this, all you should be looking for is to buy. You understand? So now let's go back to the main topic. So now you understand how to identify both a bullish and a bearish reversal. Let's say, for example, this swing structure right here is on a daily time frame. If we come down to a lower time frame, we might find a reversal in a substructure to actually set this market for a short term into a more meaningful area, and join the swing move when we see pattern start shifting to the upside again, start reversing just like I taught you. And when we see that substructure move again, reversal happen again in the lower time frame. So if this was a daily time frame big move, then we might be looking for some intraday sell in this substructure movement, some intraday selling while we wait for the market to meet a meaningful zone and reverse. You understand? So understanding how to read the substructure will really help you to intraday and catch some trades.
Right now, let's use a real chart example and see the substructure and swing structure play in a real chart. Right now, I'm on GU daily time frame. As you can see here, this market had a high here. We came here, we formed a low because this low broke structure. We came here, we formed a lower high. We came here, we formed another lower low. we had a high here and then a low. So just like I told you to always look at big moves like this as a wave instead of marking at everything. As you can see, we had our high here, we came here, we formed the low, we came here, we formed a lower high, we came here, we formed a lower low. After we broke the structure, we formed another lower high and another lower low. And if you look clearly, this we are on a clear downtrend because every low here is lower, every low here is lower than the previous low, and every lower low here is lower than the previous lower low. So on the daily time frame, we are on a clear downtrend. So viewing things with this swing structure, you can see we had the swing high here, we had a swing high here, we had another one here, and we had another one right here. So in order for this swing structure trend to be changed, this swing high, this last swing high here must be broken, because if this swing breaks and markets start making higher highs and higher lows instead of lower lows, then we are no longer on a downtrend. Until that happens, there's no reason why we should be expecting a full buy on this trend. Daily time frame, if you look at the corrective moves, you will see that market has some kind of having its own trend. That is the substructure that I'm telling you, it's having its own trend, just like this particular. Let me just delete this thing so you see it. We have the smaller uptrends happening right here, and these smaller movements like this can create opportunity for a nice trade for us within these smaller movements. When we see a pattern like this, we can actually buy during a corrective movement, that a substructure movement like this one, if we understand and know how to read market structure and reversal. Also understanding that any trade we take will be a short term, and we should not be looking to trade above this swing lows. Here's an example. If the market structure starts shifting on a lower time frame like this, we might be looking to buy in the lower time frame, but we have it in mind that any buy we are taking should not go further more than this swing highs here. So if you get a confirmed reversal pattern, we might be looking to be buying this market in a lower time frame. Right now, I'm going to dial in more using my concept, the concept that I trade, which is supply and demand. If you don't know what supply and demand is, no problem, you can leave a comment and I'll make a video about that. The supply zone will look like this. The supply zone are those zones where there were large sellings in price before, and what the concept suggests is that when market gets to this supply zone, because we've seen big movements in this market, we are likely to see another big move in this zone again. If you want me to give you more details on that, then I'll make another video about that. Just leave a comment. So why am I marking this out? Well, I'm marking this out because this zone can act as a magnet, because remember, these are zones where big sell took place. So a lot of sellers will be waiting for this zone to sell this price again. So this place will act as a magnet and a place where the next big move could potentially be again. So I'm going to mark it out as a magnet for a buy. Right now on this 4-hour time frame, if we get a substructure that reverses into a bullish, then we'll be looking to buy, and I'll take profit will be this particular place right here, this magnet. Remember, this place is acting as a magnet, and also a place we should have in mind that our take profit or anything we are doing should end, because on a daily time frame there's a supply zone here and selling pressure could come in here. So I'm just going to play this chart right now and see if we get a reversal pattern, then I will be looking to trade here. Okay, right now I'm seeing some reversal right here, because if I were to read this market like this, we had a swing high, our swing high there, our swing low, our low here, we had this low here, and then we had this particular other side. Now pay attention. You see, after market made this higher low here, it didn't came back to break this last lowest point, which could have continued this trend, but rather we saw markets now shift in pattern. We saw a break of structure on this side, and this is exactly what we're looking for when we want to trade a substructure movement. Now with this break of structure right here, now I'm going to use my concept, which is a supply and demand. I'm going to be looking for a demand zone to be buying from. So we had that break of structure right here, that break of structure there, and a clear supply and unmitigated demand zone right here. So my trade is going to look something like this. My demand zone right here, place my demand zone right here. The trade will look like this. My entry here, my take profits at this magnet, my SL will just be beneath this demand zone. And let's see how this market runs. Let me play it and see how this market goes. we got that tap in here. Now let's see how this market goes. Market keeps dancing and dancing and dancing. You see, after a while, this market take our profits. So if you took this trade, it would have been a very nice smooth trade if we were looking at the substructure movement. I hope you understood.
I know I'm not a good teacher, but please, if there's any point of this video that got you confused, leave it in the comment section. I took my time this week. I was supposed to play this video this Thursday, but I was quite too busy. I took my time this week to make this video and even watch some video on YouTube just to know how to put it together so you understand what I want to teach you. And if you watch this video to this very stage, I want you to leave a comment and say I must succeed is a mix. And I hope you learned something in this video. Please leave a comment and do not forget to subscribe. In my next video, I'll be talking more about my concept. So see you guys next time.